My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer America. Other people want to make friends, just trying to make you some money. My job is not just to entertain, educate, teach, put in context. Call me, 1-800-743-CNBC, or tweet me at Jim Cramer. Okay. How in the world is it possible that the S&P 500 is up 25% year to date, and only 69 stocks in the index are down for 2019? Consider the circumstances. After a not-so-hot day where the Dow dropped 105 points, S&P dipped 0.32%, NASDAQ edged down 0.40%, think about it. We're on the verge of an escalation in the trade war. Our country's divided like no time since the Civil War. The earnings next year are barely expected to be up. Two of the leading contenders for the Democratic nomination have big problems with big business. Yet, some day-to-day turbulence aside, the market is still in bull market mode, and it keeps climbing. First, you got to remember, a year ago, things seemed incredibly bleak. The Federal Reserve decided to hit us with a series of rate hikes right when the economy started experiencing some turbulence, and the averages got obliterated. You can see that right there. For most of 2019, we were simply rolling back 2018's losses. The S&P 500 got blasted from 2937, that was last October, down to 2346 at its lowest last December. Pretty soon, we're going to annualize that. When the Fed finally got a clue and changed course, the index came right back like a coiled spring, which is why it's now at 3135. Boom, Fed gets religion. Boom, just like that. Of course, I don't want to blame it all on the central bank. That would be too superficial. At the same time that our errant Fed chief Jay Powell got way too hawkish, the White House decided to seriously step up the trade war with China. Vice President Pence gave a fabled and I think very important major speech about 14 months ago that made it sound less like a trade war and more like a Cold War. Wall Street's terrified of tariffs, and that speech made you feel like the tariffs were just the beginning. And they were. Put it all together, and there were some major headwinds in the fourth quarter of the year, leading to some heinous numbers. For instance, Apple, largest company on earth, pre-announced a very weak quarter right at the beginning of January. And, well, let's just say that was it. Stock ultimately fell from 233 last October to 142 after the pre-announcement. That is a staggering decline. How do we survive that? Isn't that incredible? Long story short, coming into 2019, it seemed like everything was against us. The Fed, earnings, trade, you name it. All that negativity allowed the bears to grab the microphone and to predict and interpret the headlines in a way that was just downright frightening. For instance, they told us that Apple's weakness foretold major weakness in tech. The December tightening was merely the prelude to a series of disastrous short-term rate hikes that would invert the yield curve, sending short-term rates above long-term rates. That's a sure sign of a pending recession. But what actually happened? First, Apple's pre-announcement foretold nothing. Not even for Apple stock itself. In fact, the stock bottomed right after those horrific numbers and then came roaring back in a remarkable Lazarus-like resurrection. Thanks to strong cell phone sales and its fabulous ecosystem, Apple surged to 267 as of today. Sure, it was down a little bit, but you can't. At one point, it was down 5 today. People were upset. Please. Yet people were interpreting everything through the worst possible light. They were being Armageddonists, to use the term coined by J.P. Morgan's brilliant Michael Semblist, a fabulous strategist. For example, late last year, Apple told us they were going to stop breaking out the number of cell phones sold each quarter. Well, everybody assumed that meant iPhones were falling off a cliff. Turns out the opposite was true. Apple stopped breaking out those numbers because it wanted to emphasize that its future is more about the service revenue stream from the whole iPhone ecosystem. The company proved that it could make a fortune away from cell phones, including with the watch and the AirPods. But then the new iPhone comes out and boom, huge hit. Now Apple's firing on all cylinders. What else? A year ago, the Fed seemed determined to crush the economy in order to stamp out non-existent inflation. The Armageddonists wanted you to believe that Jay Powell was just a human wrecking ball. But over the course of 2019, he quickly changed course, realizing his mistakes, and then giving us the rate cuts we desperately needed. Who could have imagined that the head of our nation's central bank would be so reasonable? Certainly not the permanent pessimists. For months, the conventional wisdom said we were headed for a recession because of that inverted yield curve I just mentioned, as though that was some sort of something unfixable. Well, it turns out it's very easy to fix when the Fed stops trying to put phantom inflation to bed. Now that the Fed's your friend, and they are, the recession thesis has been taken off the table. We'll find out the Fed's next move on Wednesday. Oh, and it sure doesn't hurt that employment stayed strong all year, right down to last week's jobs number. Third and finally, last year, we were obliterated by trade worries. Now, this is the only one of those three that I'm talking about that I am concerned about. Pence's speech last October signaled that the trade war with China was going to escalate, and that's exactly what happened. Will it keep escalating? That's the thing. While the president seems consumed by the impeachment hearings, I think over the long haul, that's a sideshow because the Senate will never convict. We know the president likes to win, but the problem with trade is that his definition of a win is different from Wall Street's definition of a win. See, to Wall Street, a win is a trade deal, good or bad, doesn't matter. But the White House wants a good deal for America. And that's why they seem to think that a win means no deal, or at least no deal until after the election. What's Trump thinking? Oh, it's hard to divine, of course. Well, it's difficult to gauge. 2 weeks ago, the Chinese Communist Party adopted a predatory new stance on cybersecurity. Basically, if you want to do business in China, you have to use encryption that the government can easily break into. Thanks for that. Then this weekend, Beijing ordered government entities to rip out foreign computers, including those made by Dell and HP. I think they're looking for creative ways to retaliate against the tariffs and to actually say to the president, we're not buying it. You want to come in, you got to take the consequences. But whatever their motivation, these are not the actions of a government that's eager to make a deal. This is not like Mexico and Canada, who want to do a deal with the U.S. lest they get punished and slow their own economies. That's hence that the U.S., Canada, and Mexico deal that I think is on the verge of being done. You know what? China, I say fine. The trade war is hurting China a lot more than it's hurting us. Don't believe the conventional media. They're wrong. They haven't done the work. If you want this to drag out, by all means, let it drag. Honestly, for the life of me, I cannot believe that the president's even debating holding off on his planned December 15th tariff hikes after the great employment number we got last Friday and the possibility of a very big North American deal on the horizon. Our economy is in even better shape than we thought. The Armageddon has told us the tariffs would wreck the economy, but that just hasn't happened. So as I see it, President Trump has no reason whatsoever to make a deal. He's got to hold off on the next round of tariff hikes. There's no reason to hold off. He might as well pile them on, as a matter of fact. Give China an additional incentive to make a deal. I've been thinking 30% across the board. I'm not kidding. But here's the 1-2 punch that concerns me. On Wednesday, Jay Powell tells us the Fed's next move. If he says something about how he doesn't know whether he'll cut rates or hike them, the averages could get pummeled. I don't think he's that stupid, but you never know. Now, if we get a tepid statement from Powell, followed by tough news on the trade front, maybe the president decides to walk away from the negotiations when we come in next Monday. Maybe he listens to me and thinks about actually raising tariffs across the board more than they are. Well, you better believe the Armageddonists will be in here screaming, sell, sell, sell. The bottom line, I'm making it my mission to prepare you for that combination or anything that could bring out the negative Nancy's. If Powell says nothing about tightening and the president holds off on the next round of tariffs, this market will soar. But if they both go the other way, stocks are going to sell off, and you have to be ready to buy them into weakness caused by the perennial pessimists who dominate endlessly our airwaves. Let's go to Brandon in Virginia. Brandon.
Hey, booyah, Jim. Big fan of the show here.
Thank you.
Hey, I'm a young investor, just graduated from college. I was looking at DKS, Dick's Sporting Goods. It hit highs today. It spiked 10% about a week ago. What are your thoughts? I'm thinking about a put option on it.
No. The quarter was really excellent. I mean, I went over that quarter with a fine-tooth comb, and I speak to management. Dick's did a terrific job. I mean, look, can the stock drop a couple? Sure, but they've actually done quite well. They've really made it so that they've got proprietary line of product. I don't want you shorting Dick's. That'd be a big mistake. How about Deborah in Ohio, please? Deborah.
Hi, Jim. How are you?
I am good, Deborah. How are you?
Great. I bought Skyworks 3 months ago, and I was up 35%, so I cashed in half of my position, but I'd like to buy more on dips. Do you think this is a good idea?
Yes, I do. I mean, there was a really terrific piece this morning by Bank of America Merrill Lynch about how well Skyworks is doing. Liam Griffin is really a terrific manager. They are really a great 5G play. I've been saying that for some time, actually for about 40 points, and I reiterate, if it comes down, that's a good one. Dave in Illinois. Dave.
Dr. Cramer.
Dave.
So what's the S&P oscillator telling us these days?
Well, we're starting to get a little overbought. That's why a day like today, a little sell-off does not hurt. We want that because we don't want to get too aggressive. If we do that, then suddenly we're going to find ourselves in a fix by the end of the year, and we're okay. We're still on a reasonable level. Oh.
Jim, very recently, this all-round pharma company published an enhanced phase 3 data on its leukemia drug, Imbruvica, bolstering its case for speed and efficacy. 40 days ago, it reported 3Q results beating sales and earnings expectations. Of course, I'm talking about AbbVie.
Right.
Jim, we know you like this stock as it holds a high ranking and enjoys a heavy weighting in your charitable trust
Exactly
holdings.
right.
The stock is up 23% in the last 3 months. So, Jim, my good mad friend, please tell us more why you like ABBV.
Okay, yes, I've been doing the conference call on Wednesday about this. You're so right. This stock was radically undervalued. Why? Because, as is often the case, when you make an acquisition like they did with Allergan, people immediately freak out. And now we're starting to come to fruition. And I believe the CGRP, their pill for acute migraine, is going to be extraordinarily good. I also think, by the way, just so you know, that the Imbruvica that you mentioned, Johnson & Johnson knows half, has been a remarkable drug. It continues to be able to gain momentum. I'm no longer worried about the one product notion of AbbVie. Big dividend, stock goes to 100. David in Pennsylvania, please, David.
Jim, hi. How are you?
I'm good,
hey,
David.
Thanks for taking my call. Hey, I was just calling to touch base with you on VMware. I started to follow VMware last year after a great interview you had with the CEO. And I just wanted to get your thoughts based on the recent pullback since the earnings.
Yeah, I think I got to tell you, Dave.
I
think that the stock's been going down more in relation to people believe that if Dell's not good, then VMware's not good. Sanjay Poonam was on. He's the COO. I think he's doing a remarkable job. I think VMware is a buy, not a sell. Obviously, they're in a tussle with Nutanix, but I do think it's a very good stock. Is it as good as Splunk, which has been the best of the cloud stocks that we follow? No, but it's pretty good. All right, it comes down to China and the Fed. It is my job to prepare you for what could come this week. You are now ready for all possibilities. Because remember, if this market gets cracked on some sort of news on trade that is not good for Wall Street, that may be your opportunity to buy. Mad Money tonight. There are just 16 days until Christmas, but the department stores never look more irrelevant. I'm going to tell you why they made more than a miracle on 34th Street to turn around. Then 2 analysts enter, but only 1 leaves. Don't miss an epic showdown over the fate of ATT. Then Nutanix is down nearly 18% for year to date, but it's up over 35% over the past few months. Is it time to buy, or does the choppy action give you pause, especially after that VMware question? I've got the exclusive with the CEO, so stay with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.